So the question is, after Franklin Templeton's latest concerns, it is a lot more evident that mutual funds run a huge risk when redemption pressure hits. So in this context, PMS offers a more customized portfolio and individual demat portfolios. So do you think that PMS makes a lot more sense now, and B, should SEBI look at revising the ticket size, keeping that view in mind? Sorry, Nimesh, I'm putting you in a fix, but please do answer.
So I will not comment on the ticket size, but I will surely comment on the PMS structure, so to say. So, but also in the PMS structure, let us be clear. The success depends on the underlying stocks which a portfolio manager buys and the liquidity it has. Even in the case of PMSs, we have had experiences where people have bought very small names and therefore liquidity has been a challenge. Now, let me share my experience as an investor for more than a decade, both in a PMS and a mutual fund, and why I prefer a PMS over a mutual fund structure. First, due to transparency in the PMS, you know, in the COVID-19, I could see, so I'm an investor in the PMS which we have. And what I could see is that the portfolio of stocks I'm very comfortable with. And therefore, if I believe that this will do well, I can top up my money and get averaging into the same stocks which I can see in the PMS. But unlike in the mutual funds, I'm not sure, first, the portfolio is not live. Second, in terms of it is also not necessary that the fund manager will buy the same average the stocks. He may buy a new stock also in the portfolio. That's point one. Two, second, if I want to redeem in the PMS, it is independently traded or executed in my PMS account or demat account, and therefore there is no impact to the other investors. Unlike in the mutual fund, like what had happened right now, a huge redemption can lead to a challenge or an illiquidity for most of the investors in the mutual fund side as well. Third, I think the continuous flow which comes in through by SIP, STP, SWP, ensures or which makes a fund manager continue to change the portfolio, which does not in the case of the PMS, because the PMS manager holds the model portfolio and continues to hold it for a longer period. That is my fourth point, that in a PMS, we could see a portfolio, as Pratik mentioned, there are stocks which have been holding for 8, 10, 12 years on a longevity basis, but I'm not sure how many mutual funds, like in the case of Bajaj Finance, we held it when it's a mid cap and we still hold it when it's a large cap. But because of the definition of the SEBI regulations, a mutual fund manager may not be able to hold on to and stick to the portfolio. So these are the 4 reasons I think I would prefer a PMS structure advantageous over a mutual fund structure.